Good morning, everybody. My name's Marianne Kinsell. I'm from the Refrigerated Warehouse and Transport Association, and today we are talking about all things insurance. We're recording as quite a few people couldn't turn up today. We've been working the last couple of years, in fact, quite a few years, regarding a discretionary mutual fund, which we were hoping to set up on behalf of the RWTA, so to bring down the overall cost for the cold chain. And we've got some. Can you pop it, Norris? Can you pop it on mute? Thank you. So yeah, we're looking to bring the price of insurance down for the cold chain in Australia, New Zealand, and we have some experts in the room. And one is Paul Benjamin, who is a member of the RWTA and has been for several years, and Gerhard and Glenn from Steadfast, who Paul works with. So I'm going to hand it over to you, Paul, because you've worked hard on this and long and hard, if I may say, gathering data, which is what has taken so long for the last 18 months or so, because trying to gather data from everybody has been quite time consuming. But Paul, I'll leave it with you. Go for your life.
Thanks. I'm now going to put up a slide presentation just to let people know where we were, where we are, and where we're going.
Right.
So,
perfect. You can see that.
And you can see that, can you?
Yes.
Great. Okay. So let's and I think sharing the screen. Why isn't that not working? Oh, of course. What's the tech happening more? Sure. There we go. We're going to later on be talking about a master insurance program for the industry. It's an industrial special risks insurance product, and why this will outperform as a product a standalone policy that you might have as a business. So I'm just going to quickly go who we are. It's an introduction to Gerhard and to Glenn. Steadfast is an ASX listed company with a market capitalisation of $5.8 billion. It's a network of insurance brokers. My business is part of the network, and it's the largest network of brokers in Australasia. And part of the services that Steadfast offer to the network of brokers is an alternative risk transfer division, which Gerhard and Glenn are part of. And it helps find non-traditional insurance solutions specifically to help businesses manage complex exposures that are outside standard insurance markets policies. And that's the reason that my business works with them, because the cloud of a business that has a market cap of $5.85 billion works very effectively with insurers in the market. And just quickly a recap of my business. I started my business in 2015. I'm a third generation Benjamin-owned insurance brokerage. My father's father, started the first Lloyd's of London insurance brokerage in Melbourne in 1921. My business has over 6,000 clients, and we have offices across Australia. We work a lot with associations, and that's how we came to work with the RWTA. We get great joy from providing solutions to the members of the associations we work with. So, why are we having this meeting? Well, you are absolutely frustrated by the cost of insurance, predominantly your property insurance. That's why we're here, and the goal of what Glenn, Gerhard and I am doing is to try and bring down that cost for you. So my business became a member in the RWTA 4 years ago. It was flagged by the previous brokerage that for 5 years the discretionary mutual fund would work. 3 years ago, my business started working with Steadfast to see if we could help you reduce premiums through a DMF. A DMF works really well for businesses that are a cohort from a similar industry or the same industry. where they typically suffer from a lot of claims. So there's a frequency of claims and size of claims. And a DMF structure is really good in working with the members to bring down those number and frequency of claims, and that helps to reduce the premiums. So 3 years ago, we started working with Steadfast. 2.5 years ago, we started working with you as members to gather the data to work out if the DMF was going to work. We finally got all that data together 6 months ago, and you were very kind to help us work with you to deliver this. And the analysis of the data showed that there wasn't a lot of claims, and the claims that were there were not frequent. So that meant that a DMF really wasn't justified based on what the opportunity was. So I said, what's an alternative? And I've been involved in what we're going to talk about today, which is setting up a master policy. And because I've been working with Steadfast and their skill base and their clout in the marketplace, we started talking about putting this together. So in the last 5 months, we've been working on that. And for those of you who don't know what a master ISR policy is, it's one policy that covers multiple businesses in the same industry. It's a group buying power single policy. And the benefit for everybody is it's simpler and cheaper to set up than a DMF. But if there are a lot of claims and there's a whole lot of structure around a DMF and a lot of benefits of a DMF that a master policy doesn't deliver, then you need to look at a DMF. But based on the information we've gathered to date, a master ISR policy is a better solution. So what is the master ISR program policy? It's a single
Could
policy.
I just interrupt? Sorry,
Sure.
Paul. If anyone hasn't got their, I can hear noise in the background. Would you mind if you're not speaking, just pop yourself onto mute, please?
Okay. So a master insurance policy will provide a best-in-market insurance policy because you get to obtain the best terms and conditions for the policy, broader than a standard policy, a standard ISR policy, and you get the best possible premium because it's a group buy strategy. Sorry, so that was supposed to come up first, but so you can just see how it all works. Different businesses go into the policy program, works with the insurers to provide the group buy, which drives down the premium. It's a best-in-class policy wording. Your policy, if you become part of the master program, your due date of your policy doesn't change. You just change from your current insurer across to the insurance policy program that we've got. The great benefit for you is that there be centralised claims with a specialist team that understands the policy, understands the industry, which will drive better outcomes for you in a claims environment. And the security behind the policy are global insurers, not just a local insurer that doesn't know a lot about the industry and about the risks that you have. These are global insurers. Sorry, there we go. So the core benefits of a master policy versus a standalone individual policy is pricing and scale. As I've got there, you get broader insurance protection. It's simplified administration for yourselves because we work inside the program and understand your risks. Claims I've talked about. One of the great things that we would bring to the table is a risk engineering program, which for those of you who have not worked with risk engineers, that's an internal terminology in the insurance industry, but they're engineers who deal with risks. And the intention is, we don't want you to have a fire. You don't want to have a fire. We don't want you to have a mechanical breakdown. We don't want you to have delays in the operation of your business. And risk engineers come in and assess your environment. And typically, if a risk engineer comes in through a standalone policy, that risk engineer works for the insurer, and the report that they develop goes to the insurer, and it's the property of the insurer. The risk engineering, and so you only get to see snippets of what it is. We turn this on its head by getting a risk engineer to work with your business so that you can reduce the potential of claims, whatever they may be. Stock spoilage, through it may be small and frequent damage to property that is typically been below the excess. It might be the cooling systems, it might be the fire risk, it might be a whole range of things, but we open up this knowledge to you so you can run a better business. And then you can see there, the last point is insurer access. The insurers that Steadfast, Glenn in particular, is talking to, they're specialists in the cold storage industry. They love the cold storage industry. And at the moment, all they're dealing with us individual risks one-on-one. They get the benefit of this master policy. They understand the benefit for them as insurers, and they understand the benefit for you as members if you become part of this master policy program. The other benefits for you as a cold storage business are the risks that are a standard ISR policy does not include, which would be included in the master policy for your benefit. These are extensions that are available to you that we can negotiate in. The first one is, a primary peril, we call peril, it's insurance risk for you, is plant failure. It's not a minor add-on in a standard ISR policy, but we would make it a proper integration for you into the policy and provide you with business interruption or loss of profits if there's a refrigerated breakdown. It would be an add-on for you that you don't have to take it. If you take it on, there's an increased cost, but it protects you for this primary peril. Deterioration of stock is not a standard item in an ISR policy. We would work with you to cover that eventuality. Ammonia and refrigerant hazards, they are incredibly explosive and toxic, and we would work to have this as an add-on for you to take up should you want to have that as an extension on the policy. Each of these items would be available at an increased premium, and it becomes a cost-benefit analysis for you as to whether you want it. But we're giving you the potential of broader cover. This is an important item. We call it an indemnity period. It's the calculation of if there's an interruption to your business through something that happens to property in the business, that this part of your policy correctly calculates your loss of income during the period. Most people focus on the rebuilding time, but the rebuilding time is approximately only 30% of the total time that you need to consider in the event that you have a major disruption to your business. I've itemized the other items there, and the big one is how long would it take you to get back to operating with the same income the day before the event happens. So if you have a major fire and your cold storage was out of effective commission for 2 years while the site was cleared, it was rebuilt, you open the doors, how long would it take you to get back to having the same income level from the clients that left you to go to another cold storage? How long would it take you to get new clients back or try and get those clients back? It's often overlooked. People typically just focus on, oh, how long will it take to rebuild the building? But that's only a percentage. We would work with you to make sure that the financial risk to your business is reduced by having correctly calculated the indemnity period. Grid failure, if that happens, we want to make sure that you're correctly covered so that spoilage to stock of clients is covered, so you have reduced financial risk. And then there are those sites that are affected by weather events, flood, bushfire, cyclone, whatever it might be. We would want to make sure that you're correctly covered. And as a standalone policy, if you're in those areas, that can be very expensive. Working under a master policy can reduce the premium that you might currently be faced with. So the bottom line for us in bringing a master ISR program, it'll deliver strong, consistently tailored insurance protection at a cheaper premium than you might get as an individual business out in the market through your current broker. So there are six core policy benefits, potentially 6 industry-specific exposures insured, 1 policy wording that has broader coverage than a standalone policy, risk management offered to you to help reduce the potential claims that might happen under the policy, which helps to keep premiums down. Global insurers backing you, delivering lower premiums. So that's an overview of where we're up to. We've moved from looking at a DMF because you didn't have the frequency of claims and size of claims to a master policy that will deliver all these things. It won't interrupt. If you decide to be insured under the program, it will not interrupt your current insurance programs with your other policies. It will just dovetail into that. And the net benefit to you is broader coverage, lower premium. Thank you.
Great presentation. Thank you, Paul. That's and I like the bottom line, that information there. Better insurance at lower premiums by at least 10%, which I think is compelling in the very least. May I open it to the floor for people to ask questions of Gerhard, Glenn, and of course Paul, please. Anybody got any questions that they'd like to ask? Look, I'll start if that's okay. So lower premium by at least 10% is fantastic. Love that. What you're saying is...
How many cold storages are you going to need in the program in order to reduce these premiums?
The initial core we're working with is about 9 clients, and I think, Paul, what, 15 risks?
Yes, that's right. I think it's 16 risks. Yep.
Yep. That will achieve it. I've already in discussions with the insurers about that, and yeah, they get it. They like the concept of working with you as an industry. They like the concept of being involved in a broad array of the risks spread around the country and also New Zealand. It's the way they would prefer to do these businesses than one-off.
Okay, thank you.
When do you feel that we could get started on this?
Glenn, over to you. What's the timeline you think?
I'm currently negotiating with the lead underwriter. We're at 22nd of July. Say by the end of August. is where we're currently heading. Yeah, we're in negotiations. The hard part of this is setting all the lead terms with what we term a leader, right? And that will be the person that drives the cover, the pricing, etc. And that will be the market that the other insurers rely on to do the bulk of the work, and then they become what we term follow markets, whereas they're more capacity providers. So, as I said, negotiations are well underway. I would be looking to have this functional by the end of August.
So if I could just jump in there, Glenn, for those who may not understand the way this master policy would work, there's not going to be one insurer who is the insurer behind the policy, because this will grow, we suspect, because people will want to take advantage of the lower premiums and the broader cover. And as people, I think Norris, you just joined. Could you put your mic on mute, please? Oh.
Norris, could you please put your mic on mute? Thank you.
Thank you. Yeah.
Thanks.
So
Could you put it on mute, please, Norris? It just popped off again.
Yeah, sorry. Can you hear me?
Right.
Yep.
I can. Yeah, if you can just pop it on mute, because your background noise is overpowering what Paul's saying. Thank you.
Because of the complexity of the risks and the size of risks all coming together, there won't be one insurer on the policy. There'll be a range of insurers, the global insurers, and they all provide what we term capacity, which is the financial security to be able to pay our claims should an event happen. So the structure is we find one insurer who sets up the program, and they may take 50%, 40%, 30% of any potential claim that happens. And then we find other insurers that will make up the other 100%, maybe one, maybe two, maybe three, maybe four. And potentially as the program grows, there may be, with more companies insuring through this program, we may end up with more insurers filling up the financial security to be able to pay out on any claim at any time. And this structure happens all day, every day. Lloyd's of London. At Lloyd's of London, any policy that's issued to you will say certain underwriters at Lloyd's of London, and that refers to certain insurance companies that operate at Lloyd's of London under this structure, where they may provide a small percentage up to a very large percentage of financial security on every policy in the event of a claim payout. So that's what Glenn is referring to. Yeah.
It's also a safety mechanism, right?
Yep.
In that these are what insurers term, it's an occupation with highly exposed risk. So they're limited in the capacity that they can provide on any one risk. That's why we have a panel of insurers, which means they're all putting in a proportion of the risk. It also works well in that should there be changes of appetite with a particular insurer, then you've got others to spread the load to. As you're aware, and I mean, you've all experienced it, you've seen the insurance marketplace fluctuate from time to time. This enables us to have more control over their pricing mechanisms as well. Right. So I would see on this style of risk, eventually I would think the panel could be, I'll say 6 insurers, possibly up to 10. But the secret is, and what we're setting up is a line slip, which means once they commit to it, they're basically following what the leader does. So it's not that we're having to negotiate with 10 every time. Right? It's that they are become capacity providers behind a recognised leader.
Yeah, and what Glenn has just said is a really important thing. You know, insurers, local insurers, are affected by claims that happen across their whole portfolio of insurance risks. And that could be from cars to pubs to cold storage to mining risks. And if they have a lot of claims in one particular portfolio, that will affect the pricing across other parts of their business. And if you are just with one insurer and they happen to have a bad experience through a year and they have to remediate their premiums to get their profits up to cover the losses that they've had, that would adversely affect you buying a standalone policy buying a policy as a standalone business. In this environment, as Glenn highlighted, we're not tied to one insurer and we get to manage the premium for you much in a much more constant manner for your benefit. Yeah, Marianne.
So question to you, there are 6 to 10 insurers. That's fantastic. I guess, we're now, moving into a space where at the end of August, this is going to start, getting cracking, which is great. What else do you need from the people in the room? Have they done their bit and it's now up to you to get this going? And if that be the case, what should they expect next? Because, I think the information being passed to these good people who have been very patient with me particularly, where do we go from here?
Do you want me to do it, Paul?
Sure, over to you, Glenn, if you'd like to run with that one.
Okay, so at the moment we've got sufficient information to set up the master structure. And what will happen is as each member, as their renewal comes up, we will get that individual information in advance. And then, and that'll probably be somewhere, I'd say, Paul, around 2 months in advance, if we can. Yeah. We get the information, then we take that information, and then I will take each one of those individuals to the insurers, right, and finalise the renewal terms as each one comes up, right, or alternatively as each member decides they want to enter the master agreement, etc. And that's that's how we'll do it. The other thing is that whilst we are focused on the property, it is also our intention to do something very, very similar around the liability risk as well.
Yeah.
So we're focused on the property first because that is one of the major exposures, but also we similarly recognise that liability is a big exposure in this industry, and we want to come up with a similar solution for you.
Yeah. And one of the reasons, Glenn, allow me to explain why 2 months was the time period Glenn suggested before renewal, is that the first year you become part of the program, there's a lot of work for us to do to get your profile into the system so we can get you the best possible premium. Once you're in the system, we've gathered all the primary data and then it just tops up information at renewal time. But what we need to gather are things like we need to get a risk engineering review of your site. So we need to send an engineer out to have a look to understand the risks. We need to get information about the sprinkler systems throughout the whole building structure. We need to understand the flow of the sprinkler systems. We need to get thermal scans done of all the switchboards. We need to understand what you might be doing with, you might have electric or diesel forklifts. There's a whole lot of information we need to gather. We need so that we can build a profile of your business and then work with you to potentially reduce some exposures, insurance exposures that haven't been addressed in the past, so we can help bring down your risk profile to drive, the savings that you are looking for. Because again, I want to say, we want to help you reduce those exposures because we don't want you to have a fire. You don't want your business interrupted by a fire or any other risk that we come across. And we want to help deliver that for you. And we want to help deliver lower premiums. So the first year takes, there's quite a bit of work that needs to be done, not necessarily by you, but by gathering information by us for the insurers. And once that's locked in, then we just top that up year on year, and it's a much quicker cycle.
We recognise this as an industry where a lot of that information will already exist.
Yep.
Because, and so when we say 2 months out, it just allows us to work out if the information's there, great, we use that information. If something extra needs to be done, then we can discuss doing that so that we've got time to get that information prepared for the insurers. But as Paul says, once we've gone through that first cycle, every cycle thereafter becomes a lot easier.
So,
Okay, I think, we're getting to the, probably holding people up a little bit now, but are there any other questions for Paul, Gerhard and Glenn, please, before we tie this one up?
Just one, I think our landlord's insurance renews in August. So I assume we're looking at next year then to get in this program, or how's that going to work?
If we can get the information, that's certainly something we'll try and do for you now.
yeah,
Okay.
I think we might have, Diane, I think we might have all your information. I'll come back to you and Glenn on that over the next couple of days.
Okay, great. Thank you. Paul, can you also share your presentation? Can I get a copy of that?
Yes. Yeah, we're at the moment, Diane, we're recording this, so I'll be sending it straight back out to everyone who's in this meeting, but also everybody else that has an interest in it and couldn't be here today. So for
Great.
sure, and we'll do an overview for you as well, written.
Great, thank you.
True pleasure.
Apologies from me for my late attendance. I've been on the tools. We had a breakdown. But some of that information, and I've come in late, so I might have missed the point. But the information you're talking about an assessment by engineers, but Richard visited our 2 sites and went away with a tremendous amount of background info on how we operate here. But I take it from what you're saying, it needs to be more detailed or independently assessed now.
Yeah, that's right. Richard did come out to your site, and thank you for letting him do that. Yeah, we in the case of those people who've participated in the data gathering to now, you've supplied potentially 90% of everything we need, perhaps 95%. But for those businesses in the industry that want to come in fresh, what you've gone through and potentially a little bit more is what we need to do, and that's why we typically need the 2 months. But in your case, but as far as your business concerned, we can review all that, and there may be an independent engineer that needs to come out and review the site as well. Yeah.
Yeah, no, thanks for that, Marianne. Marianne, I look forward to the summary of the meeting anyway to catch up.
Absolutely. Yeah. No, there's a lot of people that couldn't make it this morning, unfortunately, but they did want to be here. So we'll do the written, but we'll also send out the video to make sure that everyone's part of it if they wish to be. So if that's
thank you for your time.
And yours. Thanks everyone for coming today, and we will look forward to speaking soon. If you've got any questions that you think of us after this particular meeting, please feel free to send it through to me or to Paul or to whomever, and we'll get the talk going.
Great. Thanks, everybody.
Thank you.
Thank you very much.
Thank you.
Thank you.
Thank you.
Yes.
Bye.
Bye. Have we go?